Hello, this is Arthur Hill with StockCharts.com. It is Thursday, December 5th, and you're tuned into Don't Ignore This Chart. Today, we're going to take a look at Facebook, and we're going to use a very traditional and good moving average, the 50-day moving average. And you can see here the blue line there is the 50-day moving average. And Facebook broke above, had a really strong rally. And then it had this gap, and that gap didn't hold. And so that was an exhaustion gap because you filled it. And then you broke the 50-day and moved lower. And this looks like a correction because you had basically a move from the low 20s to the mid 50s. You had a doubler, and you need to have some sort of rest or correction. And that's what this wedge did. And now we've broken above that upper trend line, and we're challenging that 50-day. And if we get some follow through and a break above the 50-day, that would be a bullish development, especially if we see an increase in volume, because you can see upside volume hasn't been that impressive in November and early December. So we'd like to see more volume coming in. The indicator window shows the price relative, which is Facebook divided by the S&P 500. And you can see it was outperforming in July and August and September, and then started outperforming in the second half of October. And it too has started to move up and is near that 50-day. And if it breaks above the 50-day, that would signal that Facebook is starting to outperform again. So this is all very interesting because there are, or at least there were, rumors that Facebook was going to be added to the S&P 500. It wasn't added on this go around, but I think it's just a matter of time because Facebook is a big company. It's probably the biggest company out there that's not in the S&P 500. So it's not a question of if, but it's a question of when it will be added to that benchmark index. So that concludes this edition of Don't Ignore This Chart. Thanks very much for tuning in and have a great day.